Alrighty, welcome everybody and welcome to the live stream. My goodness, what have we got going on here over the weekend? That announcement from obviously the White House. We'll go through it in just a moment. Massive squeeze across the board. Big moves in stocks such as Amazon, NVDA, Apple, anything to do with obviously importing from China. Up bigly, as they say. And of course, we are seeing resistances instantly hit as soon as the market will gap open. Most interesting thing today could be actually the close and how everything plays out, because do remember yields are spiking across the board as well, up almost 2% on each one. I hope you had a good weekend. I hope you're ready for a pretty big show because we've got a lot to discuss. I've got some, obviously, some little alerts up there and some announcements so we can go through it all together. But of course, the big news of the morning was what happened overnight. If you were in the Asian session or London session, then you would have seen the markets ripping and probably getting questioning what's going on here. But yeah, as I posted over on X, the announcement was that Trump has changed the game in terms of taking off the tariffs. So he's gone from 145% down to 30%. Now, I think there's a little bit misconstrued, the 30%. So it's basically, as far as I understand it, 145% down to 10, basically. And China is moved from 125 down to 10 because they already had an existing tariff on there. So I'm pretty sure it's 10-10 when you actually break it down in terms of new overall tariffs. Someone in the chat can change my opinion if you wish to on that one. But as far as I understand it, that's pretty much what's looking. And this was the announcement, joint statement on US-China economic and trade meeting in Geneva. And it says a lot of stuff. And then generally speaking, it says suspending, all these rates with confusing numbers. And then ultimately you end up getting pretty much going back to this kind of thing here. So we had these tariffs on and we're kind of just like bang straight back down here. But the 10%, just like every other country in the world, remains. So the 10% seems to be a non-negotiable factor, or at least the non-negotiable factor that the Trump administration wants to keep on. And it really still is a tax ultimately. So just remember that while the market's celebrating this, and don't get me wrong, it's a full reversal on everything that's been happening so far. The markets love that kind of thing. And of course, they're optimistic. Just remember, if we continue to get this, and you might say, well, it's 90 days only, Tom. I think that's the last time we've heard about this one for a while. What do you guys think? It reminds me so much of 2018. It's gone. Do you think any of these 90 days are actually coming back, or do you think they're just going to be extended on? That seems to be the way it's going. Thank you to the almost 1,200 viewers here so early in the morning. Welcome, guys. About a bit less than 1 hour before the market opens. Markets have gapped to resistance zones, which we'll talk about. Could they see a sell-off now? Is this just way too good a news in terms of the news is too good? I'm still skeptical of it, but based on the close, I think that if you bought the dips in recent times, so particularly you bought those 200-day ones or the 61.8 retrace, of course, you'd be pretty happy. If you're trying to look for, some kind of pullback here, this is the type of news that obviously gets markets frothing, but they do move to equilibriums very quickly. And that's why we find ourselves at this resistance. And I can see it here in the chat. So many people obviously absolutely going wild. So I'm sure a few of you have got some big calls and some other stuff here. If it's in the press, it's in the price, right? Well, yeah, I mean, that's a great statement, of course, generally speaking. In this case, price has already been looking towards this. So now we have kind of the best case, I guess, if you could say it, which is just it's gone away for now. So obviously the markets have pushed towards the next area here. Do you reckon we should sell after 90 days? I don't think I think I'm actually going to do a poll. I want to know what you guys think more than anybody else, because let's see. Do you think it's coming back while we've got that on? This might be a bit unviewable, but this was the Ministry of Commerce spokesperson's remarks. Just a little bit more information there if you're interested in taking a look. Let's do a poll, guys. Let's see what you think of this whole situation. We'll load it up right now. I'm just going to refresh it. Oh, that's nice of YouTube. It's dead. All right, we'll just put it in the chat. What do you think? Do you think they're coming back or not? These 90 days, do you think tariffs coming back or not? 1 for no, they're not coming back, and 2 for yes, they're coming back. 1 for no, 2 for yes. Let's see what the chat says. I think the tariffs are going to be sticking at these rates here. So I'm going to go with 1 myself, but let's see what you guys think. 1 or 2. We've got a lot of 1s coming in. A few people saying 2. We've got 2 here. We've got 2 here. A couple of 2s. Most people wanting good vibes. Says 2. Okay. All right. So I would probably say about 80% of you plus basically think that the market is a kind of not going to see these tariffs, or these tariffs are going to come back. So most people think that no tariffs coming back. They're going to stick at the 10, and 20% of you think that the tariffs are coming back and we're going back down the line of trade war negotiations. So look, ultimately, you've got to remember a couple of things. Is this a relief? I'm sure it is for many out there, especially parallel importers. The market obviously likes it because it wouldn't be up otherwise. And now you've got to ask yourself, have they loaded their bags sufficiently for what they believe is now a reduction in tariff, a potential deregulation, and of course, a tax cut in the future? And we already know that retail has been predominantly buying, and that buybacks have been a huge part of this game. And I can show you this actually with a chart here using Smart Money Flow Index. And you can actually see here that Smart Money was dialing it down a little bit into this announcement, not too much. They've obviously bought the dip as well, don't get me wrong. And we know they bought the dip because this was a huge injection of sentiment here. But retail has taken over the last probably, I would say like 5 days. Retail has been taking over and buybacks have been taking over as we saw the market move up. And what was curious is we saw those little bit of the dark pool trades, the dark pool liquidity come through. And then we didn't get any more trades for dark pool, big ones, for about 4 to 5 sessions. Now, I'd expect today to have massive chances of massive dark pools at the end. Chris says, so no double bottom then, Tom? Geez, thought you were pretty sure. Look, we saw the Fed announcement last week. Obviously, that announcement had a trap in it. That trap was on the NASDAQ. We saw that resistance break through. This is a situation where, of course, Trump basically is full on moving the markets over weekends. So will we get a movement back down, double bottom, like a 1998 style narrative? It's possible, less probable now, of course, until the tariffs really flow through. So that could take a long time. So you probably will get a pullback. The question is, will you go back down to those lows? So our original theory was that we were pretty sure on the low itself. So that was obviously over here. We'll talk about this because I know a lot of you guys in chat are interested. So this was, very good. This was pretty good. We talked about that. This was certainly a resistance that's obviously been blitzed by this news. We saw a trap appear here. Okay. Then since then, we've got a squeeze that's come through, which is obviously pushed higher. And we've seen no signs of a sell. So with the only sell portion we got were about 2 days worth of smaller dark pool trades, no really big kahuna ones that we traditionally see. So could we still go underneath this? Yes. If we do, will we fill gaps? It's likely. A double bottom would obviously be the lows. I never thought that we'd go back to the lows other than some of the data around here until we got this release here with this WAG breadth thrust. So there's like 2 cases. There's the investment case and the position case, and then there's the trade case. The trader, remember, doesn't give a crap. You don't care whether the market's up, down, all around. You just want replicable strategies. The investor obviously wants the best price. And we spoke about, some of the methods, and I do have repeatable processes that I use in zones like this that have absolutely nothing to do with anything other than just focusing on a systematic approach. Now, when it comes back to this 200 daily, which we're going to break today, this was the area that we were looking for. So you've got to remember, yes, you're up a little bit here today, but you're only about 3% up on the S&P from the kind of resistance that we thought would be preached. So is this good news? Does this change things? I'd say yes, because it's a deal that had to be done. And that deal that has to be done obviously does change the case here of bulls coming back into the market and then looking for deregulation and tax. The 10% tariffs, though, ultimately will do I think, a big number on the markets. And I think the thing that we have to be watching is now the focus goes to yields. So I don't believe these tariffs are going to come back other than the 10. And I think most people are now on the market going to be watching the US 30Y. So how does this react today? Do we see a spiking into 4.95%? If we do see that spiking, do we then get concerns from the market about debt at the end of the year? There are always other reasons, you know what I mean? So there could be a totally different reason that takes us down this line very, very soon. And what I'd always say to people is you have to be amenable to a degree. You know, did we think the bottom was good? Yes. Did a lot of people think it was the end of the world and everything was going to explode? Yeah, of course. Did we think we'd get back to the 200 daily? Yeah, I did. Did I think that we were going to have a weekend where we'd see this replication or this particular complete total movement of tariffs off? If I was negotiating, I probably wouldn't have done it this way. But hey, you know, what do I know? I'm not the king of negotiation. Neither are probably any of you guys. So I would say that this is the, you know, it's basically just going back to square one. But in some ways, a worse situation. So there is damage, and we just don't see it. And you're not going to see it for at least 6 to 9 months. It takes a long time for the damage to come through at these better reduction rates of tariffs. But what do you guys think in the chat? Let's read out a couple of comments here and see what you think. 30% Tom is keeping 20% fentanyl on. Yeah, but I think it's 20. I think it's 20% anyway, and then it's 10 on top. So the debt problem is the next question, which is the US 30Y here. Now we move on to tax cuts, whether they happen or not. Yeah, Joshua, that's part of it. I think the debt one is the main thing that people move here. Is SQQQ cooked? Depends what you're doing on it, I guess. If you're trying to short the market, then it's up a lot. We're at resistance. We'll go through it in a moment. But we are opening straight on resistance here this morning. Crazy how other countries are being run volatile. Everyone afraid to short, blow off top, sell the event. Well, we are at, of course, short and sweet to the name. We are at that resistance, of course, here. Everyone's forgotten about the weakening economy all of a sudden. Oh, yeah, this is how things happen, man. You always get these people that what happens is we get, you know, significant FOMO, significant fear. Believe me when I say I do not have either of these feelings right now. I see it for what it is. We're at this resistance. We're at key points. I've prepped it all here. This is the kind of top end that I thought we'd hit into on the NASDAQ. We've got a little higher today in the futures market. And then if we go over to Bitcoin, we're still trading around that resistance high. And the S&P, I don't know why I've lost my chart here because it's wrong, but I had my levels up here, which was 58.40. So I had 58.40 as my high, which we've just tapped. It's not actually a core wall, but that's the high. And then I had the 57, kind of 80, 57.90 zone. So somewhere in here basically being a resistance point for the S&P. So now that the market's gone absolutely ripping, you've got to remember the street will have missed some of this. So of course the street does buy in futures, but predominantly we haven't seen real market action through this particular point. So let's go back to the SPX for a moment and just kind of get a bit of an idea here. We're going to have a gap at 58.50, 58.40. We're going to see a market close at 56.61. So that is here to here of 3.28%. That's going to be missed by the street at this point in terms of a lot of the funds won't be able to get that. We still have how many gaps open do we have? We have quite a lot of gaps open. And we've obviously got, that one should be here. And we've obviously got on top of this, the yields. So, you know, it's not all rainbows and butterflies and fantastic stuff. You've got to remember the market has been pricing in this deal. So we knew it would be reduced. We knew that obviously I was thinking, yeah, around this 25, 30% kind of action. And that this would be kind of the new thing that comes out. I think the market's smarter than we are, so it would have already priced a lot of this in. You've got to remember, while today everyone's celebrating the fantastic, you know, all-time highs, V-shape to the moon and back, a lot is already in there. And we know this because they started buying this rumor on this exact day here. So they started buying this rumor right around here. which was obviously when we heard that the tariffs might need to be reduced. You've got to remember that the street's not stupid. The street started buying based on this already. Then we got to this resistance. This is going to squeeze a lot of people out. And now the question is, will we actually fall from this zone? So let's do another quick poll here. 1 for yes, we're going to short this week, and 2 for it's all long, all green. Let's go. Let's see what you guys think. 1 or 2? 1 for the shorts, 2 for the bulls. So there still is a couple of things here. Hi, Tom. I exited before earnings and after earnings. I plan to re-enter the stock. There's no impact due to tariffs or recession. Can you please review it? Maybe we'll have a chance later. We'll see how we go. He's been thinking of tariffs for a very long time. He is determined to find a way to make them work. Yeah, well, 10% across the board. Do the opposite, they say, right? What are some good Chinese AI companies? I saw NVDA CEO saying they aren't behind. Yeah, well, I mean, I wouldn't really usually go an individual Chinese company. I tend to just buy the whole basket, but hey, there are ways here. So inflation reading this week will be a trigger. Yeah, I have a feeling. I just have this weird feeling this is all done before that inflation number. I was actually mentioning this in the macro. So for anyone that doesn't know, Tuesday open, 8:30 a.m., we have the inflation read in the US, and it's expected to only go up 0.3%. And obviously, this is going to be probably the more interesting inflation read. So could that result be poor? Could there be something in here that we don't know about? Most of you guys are going, actually, it's a mixture of moon and bearish. So mixture of moon and bearish from the chat there. Welcome to 2,500 people joining us. Appreciate it, guys, throughout X and YouTube. Hopefully you're having a good day. We need to get blue sky in a month. That means all-time highs, I'm assuming. I only trade BTC, USD, and 99% long. Long is always a better course of action than short traditionally, Ron. So you're not wrong there. You got to remember, I've always said this, you're better off being an optimist than a pessimist in markets, because if you're a pessimist, then predominantly you'll miss out on a lot of opportunities throughout history. Now, there are times to be pessimist, and I certainly think that, and I've said this to everyone, and you guys know this as well, that this crash or fall or whatever we want to call it has to be remembered, because whether it turns out to be a doubling, a bit of a pullback where you get that 98 style pullback and then you go into recovery again, or it just keeps V-shaping or whatever, and it's more like that 96 run. I think what's happened here is a sign of a market that is already starting to decay. And what that means is that it's not like, every other sell-off we've had over the last couple of years. It is different. It has different properties, and it's coming out kind of climbing a wall of worry based on realistically final economy support. Things like tax cuts, things like deregulation, and obviously shaky debt questions of treasuries. If you're not familiar, treasuries will have a massive debt refinancing this year into 2026, and the market hasn't even begun talking about it properly. Do you think stocks will go down once tariffs finally take effect? It takes a long time, 819. So basically, that's why I've always read in the Daily Show, which I appreciate you guys watching, thumbsing up, all those types of things. Very much appreciated, guys. What I always say with tariffs is it takes a long time. So I already knew a lot of people that even I know in the US had 3 to 6 months inventory bought up before these tariff things happened. So basically that then means that what happens is you get this huge boost in the economy because people go and purchase and they front run. And that's why we saw in the used car market, what did we have? We had these massive used car spikings. So effectively we saw huge amounts of people purchasing used cars, and they were starting to actually push the price up, panic buying effectively before it. And we've seen panic buying according to you guys about Lowe's and some other places as well in the US, with people going out and starting to say, well, I might just need to do this upgrade before the tariffs come through. That stimulates the economy. Then ultimately what happens is prices would go up a little bit. That then means that people go, oh, it's a bit more expensive. They'll purchase less. And then that tends to form it down to, lowering, obviously, demand. Lowering demand causes deflation, and deflation often can cause recessions. Like, we've never seen tariffs that have stuck. We haven't had that many points in history, but we haven't ever seen them do anything other than cause pretty bad market structure ultimately. But that doesn't mean you need to fall into the trap of thinking it happens straight away. They take a long time now that they're reduced, especially to 10%. According to Paul Tudor Jones, markets to make a new low despite tariff cuts. Yeah, I know there are a lot of differing opinions. 2025 we knew was not going to be easy. We expected a 10 to 12% sell-off in Q1, and then obviously a recovery to an all-time high. That was expectation. Then Trump put Liberation Day on us, and that obviously wrecked it all and pushed it all down. But still, we had those metrics down here. We obviously found the 98 narrative was the best narrative so far. And at the time that we record right now, we're here. So is it still possible to decline? Absolutely. And then go up. I'm not sure if Paul Tudor Jones is correct about making a new low over these next couple of months. I don't think so. But if tariffs do stick, the 10% across the board, because the economy was already getting slower and older, that is, it's possible. Cars are putting people into ridiculous debt. Oh, man, I've been looking at some of the US debt calls. There was like, this person was insane. Anyone ever worked at a car dealership here? I have to say this. So it was so wild. So car dealership person, I think worked for Audi. They had 3 cars. They must get a deal or something working at the Audi dealership. They had 3 cars. Their monthly repayments were $2,900 US. And the bro's like, hey, I got 3 cars. And then they interviewed each person in the dealership. And everyone in the dealership had between, except for the top manager, which had 1 car. He was probably smart. Had like 3 cars. They all had like 2 or 3 cars. And they were paying between $2,000 and $4,000 a month in repayments. I'm thinking, what is wrong with these people? I mean, none of you doing this, I hope. Nobody out there has over 3 cars on some kind of weird loan, do you? Put your hand up if you have over 3 cars on loans and you're not absolutely stacked, because that is a bad play, guys. Anyway, I don't know what's going on in the US, but a lot of those are underwater now. So, yeah. Car buyers will spend an extra $50,000 to avoid maybe spending $5,000 on an older used car. Yep. Jeff has 5 cars, but this one, maybe he bought them cash, so that's okay. Bear case is over, says Lou. Bear case will always be there, Lou. If you believe me when I say, when you think the bear case is over, there's always a bear case. Remember, you cannot have actually a good bull market without a bear case. The wall of worry you must have, and that will go to yields. Yields will now be the thing, as we're seeing. And look, tariffs should still be a thing. It just should be pushed to the ultimate point. Random Q Hacker says, I stole my car. Okay. Maybe you should give that back, sir. I buy with cash. There we go. Sold everything in the pre-market, says Ben. Well, congratulations for sticking to, I guess, what your rules may be, Ben. And hopefully you had a good bull run so far. All right, so let's talk about this. So we've got this high. We've obviously got this resistance that was in the box that I thought was possible. It all really started as of the Fed day last week, and that was particularly from the NASDAQ and this absolutely sneaky thievery that happened here. Did anybody get a buy off this last week? Chuck your hand up if you did. Congratulations, by the way, if you did do that. Now, this was very sneaky. If you would have told me that that was going to happen through the session, I wouldn't have known. But when I saw it, and I went, oh, sneaky, sneaky, sneaky. And that's why, of course, we put it in the show. As I mentioned, it was a huge switch of trend. And to me, it just seemed like an absolute, we're going to potentially crack a new high. And of course, that is what we've done, though we've done it with news that we didn't necessarily expect. And that was, to push now towards 20,600 and even 20,800. If I had to guess, I would have said 20,600 was a good idea. But anyway, it went a little bit higher than that. Does anyone get this one? Jedi says, yes, I did. VIX is 19. Why are yields spiking on good news? I think, there are also underlying concerns about debt growth. The problem is, as well, is it's kind of like a self-fulfilling wheel. You've got the dollar absolutely ripping up 1.18%. By the way, the dollar's been a good trade. Well done if you've been on that trade. That's been absolutely ripping. In fact, that's getting close to hitting that. That's hitting some people's first little mini targets. Sure, a few of you are on dollar bull runs and therefore euro shorts. But yeah, wow. Dollar could move up to like a 102.80 now. And when you've got yield spiking like this because of world trade, then, or sorry, dollar spiking, then you're also getting yield spiking. And this is the concern, because really Trump's main focus was this year was to try to get the supposedly dollar down and yields down so the refinancing could be easier. That will definitely become the story. Inflation obviously is going to be an interesting one on Tuesday, but I think you should just look at it, the action right now, and ignore that macro possibility and instead say, okay, what do we know? We know the market is at the resistance of 58.40. It's not a major one that most people are going to have on their bingo card in terms of the markets. It is there. It is certainly one of the ones that I've been kind of looking at within the grid range. I believe today's close is going to be where the action happens. The last 1 hour is going to really show us a lot about what the market wants to do. And I do think that the market is pushed straight into the equilibrium. So whenever you get this, it is difficult for the markets to get that much more excited. I mean, 4% up on the NASDAQ is rare. Some cool stats coming off that as well. That will go with his way breadth thrust pretty well, I'd say. And then the US 500, 58.40. It's a very, very good resistance. So we've got some correlations there as well. Bitcoin obviously sitting today after its epic runs. So yeah, it's very skeptical on this resistance. I think it's absolutely slammed straight into it. Tom, what are your thoughts on Bitcoin now with the tariffs? I think Bitcoin is positioned relatively well right now. We saw gold obviously struggle the other day. As soon as that happened, we talked about Bitcoin being the next big proxy along with potentially silver. And so far, Bitcoin's obviously ripped it. It's gone, 20-something thousand dollars since that point. Silver went up, but not much. It is holding its ground. I'll just quickly bring up here silver versus gold so you guys can see the differential. I still think silver's turned against gold, and that although you guys know me as big gold bull, obviously I don't think gold's bad to hold. Today it is, but predominantly I don't think it's bad. Geopolitical tensions aren't going anywhere. I mean, yes, the weekend was all sorts of, theoretical win on win on win and, ceasefire and this and that. But I think silver is going to probably compete pretty well, hopefully in the market moving forward. And it obviously seems to be baselining. So that's a good sign from a TA-based perspective. It actually has changed a little bit of trend. And you can see here, silver, while being down before, has managed to recover to only being down 0.4, even against a strong dollar. What that's telling you is silver is stronger than the USD in many ways right now. It's holding its own against an incredibly strong dollar after the US-China news. For anyone that's coming in and you aren't aware of it already, US and China have done a tariff kind of stoppage. We've gone to 30%, something about 20% fentanyl charge and 10% baseline from China, from the US. So that means it's the 30% overall and 10% China in terms of the baseline there. So that's down from 125, 145 or whatever it was. Obviously, the markets are liking this. They're up 4% on the NASDAQ and 3% up on the S&P. The S&P smashed into our top base kind of concept, which is 58.40, 58.50. And the markets have done this all in the pre-market before even Wall Street has woken up. Oscar saying Tesla ripping. Yeah, I think Tesla is ripping. And it was, did anyone get this on the close? Now, you would have been a little ballsy to buy it into the close. Obviously, a TA break higher. But I think this is a really good representation of why you might want to leave your opinion at the door, and especially the news. Because if you were reading the news, especially off the lows and even around here, has anyone seen a positive article about Tesla? Nikki says here, yields don't seem to weigh on stocks. They do. It's just when they choose to use it as the narrative. You've got to remember there is a point where it crosses. So we've seen the Fed and the US government kind of flinch at 5% on the US 30Y. Until you're back at a 4.95 or a 5, you can't expect the markets to care. VIX broke under 20. Yeah, that's good. Used a credit spread on Tesla. Okay. If you were a long-term investor, would you be in or out? How long? How many years? You're talking 10? You're talking 20? You're talking 3? Kathy Wood was buying Tesla. Kathy Wood. Anyway, good overall. Obviously, range here. Very good coil just before the 300 call wall. Obviously, 321 today. Up 8. That's going to create gamma squeeze. Could go to 330. That's possible. And you get this island reversal kind of concept down here as well. So actually, pretty good TA to spot with, and that was against. I mean, some of you guys said, "Well, how the hell can you be bullish on this at all?" And I said, look, it's not about me being bullish or bearish or anything. It's just about what the price action shows. And the price action showed consolidation with a strong 270 put and a really strong call at 300. And we knew that if we could get through 300 and we put pressure on that on Friday and broke higher, there was a decent chance the markets would try to move towards next equilibrium. And that's really all that trading is about. Now, if you ask me, do I want to hold Tesla for 10 years? No, I don't. Because I think Chinese autos are absolutely ridiculous, and they're getting crazy ridiculous per year. I wouldn't be competing. And you might say, well, it's not an auto company, it's an AI company. I'd say those auto companies are going to turn to AI companies, and they might be ridiculous. So it's very difficult to pick the winner on that. Tesla is a cult stock, says Eric. I guess you could argue that in some ways. Yeah. Kathy Wood, not what you should. Kathy Wood does not what you should. Yeah. Do you think this market can sustain these prices? I think this is good news just because reducing tariffs by the unbelievable numbers that were there, we were about to hit really big problems. So I heard from someone that I talked to on X, and they said that according to their doc, like the contacts in the doc, had like 2 or 3 weeks left. So they needed to get stuff in. There was like not much. So we were probably on a timer. Tesla isn't an AI company, according to says it's a very polarizing stock. I understand this, but when the best thing you can do is if you see a bullish, let's say you hate a stock, let's say you just absolutely do not want to invest in Tesla. Let's just say that's your opinion. And you see a really bullish setup and it looks really good to you. Why wouldn't you take that as a trade? You're biased short. So if you see a bullish setup and you go, wow, I that's my replicable pattern, you could be the greatest Tesla trader potentially if you were going long only longs, never shorts, because you're biased short. So when you see strong longs, you'll be like, wow, this is actually a really strong long. And it's amazing how bias kills us in trading and investing. And that's why I often say if you love a stock, let's say Tesla's your favorite stock, you shouldn't trade it. You'd be a terrible trader. You'd just be buying every single time. NVDA at resistance. NVIDIA had a good morning open. Let's have a look at some of these big winners from today. So we've got obviously Apple here up 6.4 on the news, 210. Be interesting to see if these things stick and we continue to have 10% tariffs around the world, what that's going to do to these guys' plans, in terms of, I assume Apple's still going to diversify through as many countries as they can, but 211, bit of resistance there on this stock. NVIDIA 121. Now this is really, really something. Now again, we saw this in our semiconductor SPY. So let's have a quick look here at semis versus SPY. And what this showed was that we saw a breakout kind of starting to come through 1st of May, showing us that this market was quite bullish. Now today we're going to break the 0.405 on the open. And that's showing you again, semis and AI and tech are back leading this market. And that is, again, traditionally a bullish sign. This chart was really important. And I think for a lot of people, what they saw here was already looking pretty delicious. And it was actually going up, you've got to remember, as the market coiled. So yeah, pullbacks again, if it is going to happen in the future, which I think it still will, then you've got to like what you see here. I think you will not like, these tariffs in 6 to 9 to 12 months if they keep sitting there. because they're going to do big damage to the economy. But again, that's a time and a place in the future. Most of us are goldfish. We have memories that are like sieves. we forget what we ate for breakfast. Do you guys know what you ate for breakfast in America? Because I know you're probably up bright and early. Do you know what you ate for breakfast this morning, or someone has already forgotten? I don't remember what I ate for breakfast. There you go. Best advice for the market is buy when it's at extreme fear and sell or short at extreme green. Well, that's the fear greed concept, but it's not as easy as you think. Like when is extreme fear? Is extreme fear 20 on a fear greed index? Is it 7? Is it 1? Yeah, there are other ways of creating great sell and buy strats that are replicable through some very, very nice indicators. And we have shared some of them on the channel, of course. Shorts is what I ate. No breakfast today. I'm having to save. Okay. Sardines. I'm from Oz, and the same for me. Yeah, there you go. Just buy when Kathy sells. That was like what's his name? Kramer. Buy low, sell high, fear. Please buy shares to support my shares. Okay. Just the coffee for me. Well, you still know what you were doing. What was the news? The news is China-US deal, and you can check it out on our X account. Chosen Totem says, Tom, is the 98 track still in effect? Well, technically today it broke. If you were to say, has it broken? So why would it break? Well, we made a new high. So I don't know where I'll bring it up in the next video and we can talk about it. But basically we were here, of course, going into the weekend. So the 98 follow-up, so let's have a look here. It doesn't actually change my opinion of where we are in the markets, but it was like this. It was like literally a carbon. And we had the same kind of little pullback, and then we came back to the supply. And then at the moment, obviously we're a little higher, which we kind of guessed might have happened after the Fed announcement last week, because we got the low that was stolen on the NAS. So that pushed us to think a new all-time high, or not all-time high, but new high was coming. So now you're kind of saying, okay, well, can we get this type of thing? Which was kind of the scenario that we were playing with. So originally it was, maybe we'll go down here, 5,600, 5,660, daily 200. Check, hit that. Obviously rejected it twice on the NASDAQ as well. And then, this is the question mark. Are we going back here? Do I think today is so much winning that everything's fantastic? 10% tariff across the board. Can a market economy that was already pretty hot eat it? Possibly. Wall Street does things that don't have to be in the reality. So remember, the economy and Wall Street are different things. I think the close will be very revealing today. Where do we see the dark pools? Do we see 58.50, 58.40 hold, which we're currently at? Do we see a rejection coming through where we kind of go, wow, the news is good, but now we're worried about yields. Do yields spike? Do we see a 4.95 on the 30-year, and then that freaks everybody out? These are some questions. I would say I think we've hit a temp res around here, but it's not strong enough for me to back in. You've got to always say, do you have a replicable process? So throughout this, the replicable processes that I would say were the easiest was the first drop, the rally into the dump of 61.8, the second drop in here. They were both very good. This one was okay, which was the release of the news and this wave breadth thrust. And then this short that could have come through here. But traditionally, when you smash an overbought indicator, you tend to lead a little bit higher. So if we dropped here now, then I think we're going to undercut that. But again, you've got to always ask yourself, just because you think something doesn't mean you activate something. You always must be, where is my replicable edge? Where is the edge? Like, we cover a lot of pairs. We cover gold, we cover silver, we cover oil, we cover stocks, we cover indices, we cover everything. So sometimes you're going to have a lot of edge on something. Today, I would say it's a res that I would have thought the market would have hit. It did hit it in the futures action, but I want to see the close. The close is going to be the key today. What do you guys think in the chat? We'll read out some of your comments. Doesn't matter if you agree or disagree. We'll go through those. Best buy indicator was fear greed index at 4 a month back. Yeah. That's one thing, but you won't usually see a 4 fear greed. But yeah, for sure. That is definitely fear in the street. I would say that's not the best indicator because it's actually based on a bunch of indicators. Learn what they are. More importantly, focus on, I'll give you a hint. One of them would be percentage of stocks above or below certain moving averages. M2 growth, it's a good time to hold and wait. Yeah. So this is a positive catalyst. M2 growth, yeah, certainly is there. Tom, do we need a technical signal to buy or sell S&P 500 for this week? Well, the problem is you're up 3% into a res. So, how can you buy that with replication? Honestly, it's not going to be replicable. So you've got to be, you got to be looking at that. Scalby says here, tariffs with China were about 10% at the start of all of this. I think it's on top in some ways if you actually look at it. If you look at silver mines, they were all up on Friday. Mm-hmm. If something sneaky happens, it'll be after everyone's chips are on the table. Yep. It's very difficult to play into a resistance. That's the problem that a lot of people don't understand in markets. And you guys you're all smart. You've been around a long time. We've all been sitting in markets for years now. And as you know, the problem with news like this is it moves straight to the resistance. We're straight there. So now that we're straight to the resistance, what do? Do you take some profit off the table? You could potentially do that. Do you buy here and then just hope that it goes to 59.50? Where do you put a stop loss? How do you risk mitigate? Is it an investment? Is it a process? What sector are you looking at? And these are the kind of things you want to do here. Another thing I've learned from trading the past 5 years is stay away from options when the VIX is over 27. I got SPY puts when it was at 608 for 5 weeks at 570 for 130 and sold them at 1250. Mm-hmm. Yeah. So when the VIX is really high, you generally want to be more on the credit side. The VIX obviously is, but you need to know what you're doing. The VIX is ultimately a massive cost. The other thing as well, I saw this in the comments. I just want to reiterate it. We do have earnings this week, mostly of China stocks. And China's up bigly today as well, because as you can see over here, we've got, I must have reset. I thought it was up quite a lot. It was up 3% or something, wasn't it? Yeah, it is up. When you're going into an earnings announcement, if we're an earnings announcement of plus minus 11%, let's say, then that's priced into the option. So if the stock then falls 8% the next session and you think you're going to be up because you've got a put on that stock, you will not be up because you've paid for a lot of that implied vol. So just remember, that is expensive to think about. Tax cuts and yields might hit 6%, like Jamie Dimon mentioned. Yeah, if we get stimulation in the economy, then we're going to get really high yields, and that's going to be super dangerous. Yields are certainly the one to watch right now. It doesn't seem quite fair that the US doesn't take part in these huge spikes. They have to wake up to this. Doesn't seem quite fair. Oh, the US has the best trade time in the world most of the time. That's all right. I'm sure you guys in the US, you can give it to some of our European and maybe a couple of Australian people. We blew past the 200 MA. Yeah, it's a very bullish statistic traditionally. This is a massive, massive hold. If it holds up, US 500 breaks the 200. Why does that keep resetting? A stupid ass thing. And you can see here that if we have we'll go over to this chart maybe. I'm just pulling one up here. Okay, we'll use this one. So if we look at the US 100, the 200 daily is sitting like right there. So it's blitzed that. And maybe what we can do is we'll just adjust. We'll add one. So we'll add a moving average here. And I'll show you what I mean, guys. Because it's a big deal. Blitzing the 200 is the type of thing you do when you tend to go for all-time highs. And ultimately, so I'll show you the 200. So there's the blitz of the 200. Obviously, incredible read. Very good. One of my favorite moving averages, second favorite moving average. But notice the blitz, the return. So we keep running, very good chance we'll get the 200 in the future. Here's a blitz, returns back. These are all supports. This was 2018 trade wars, the de-escalation with China. Blitzed it, returned it pretty quickly, returned it later on, a few months later as well, and obviously rallied. Same price, by the way. They're all the same price, as you notice. And here is another dump of the 200 after the 2015-16 period. We recovered past it. This one was a little bit more choppy, but you got to remember that this was a super sideways market. There wasn't much momentum coming in because it had already dropped. And you'll notice the 200 respected and then broke. And then obviously it did come a double bottom later where it hit back. That was a fairly unique period, though, the 15-16. If you did trade, it was a little bit different. This is certainly quite bullish. But close will be key. Trump did post buy stocks, didn't he? He did, I believe, last week. Well, allegedly, I don't know. Actually, I'm not going to say anything. I don't know anything anymore. Someone in the chat can do it, and I'll highlight it. Sell call spread above 5,900. That's a strategy if you know what you're doing. Tom's biggest mistake, thinks too highly of his community. What do you mean, man? I think highly of everybody here. Come on. Why wouldn't I think highly of the community? I would like to think that most of you guys have gone through and watched many pieces of content out there, and you've realized that there's more to it. There's complexity to it. You've come here, you have more of an understanding. We learn together. We obviously keep improving together. And I'd like to think we have some damn smart people in this community. I know we do. There are a lot of silent people in this community that are pretty well-to-do. Let's just say that, which always baffles my mind how well-to-do they are. But anyway, there you go. If you're in on the lows, I just let it ride. Yeah, I mean, if you have the lows, then you can certainly be holding a position. I wouldn't have blamed anyone for descaling a bit around here, though. It's a very valid descale point. But I thought it was very telling that we didn't get any more dark pools last week. I'm new to this channel, but it has really helped a lot. Cool, Daniel. Appreciate that. Thank you very much. Morning, Tom. Would you mind sharing your thoughts on NEO? Let's have a look at a couple of more stocks. Amazon's the big winner today, by the way. If you look at Amazon's up about 8. NEO has been in the doldrums for a long time. It did low steal recently. I had a look at it there. It's up today 6. In general, I think this is around the lows for the stock for now because it's been consolidating for ages. So with this news, with stuff that's happening, possibly gets a rally. I wouldn't say that's a fundamentally looking great stock, though. Maybe you know something I don't, but yeah, it doesn't really look that way. Let's have a look at American stock to back against that, which is more of an Amazon, up 8.23, celebrating the ability to sell Temu-like products again. 209 up to above 200. Again, this is a significant day because it's gotten above the moving averages. It's gotten above the higher high. You know, these are all great signals if markets do pull back in the future. Took some profits on Friday, hating it, although you never get broke taking a profit. I think it's risk mitigation, Alec. I don't think you should ever hate on yourself for doing that. Look, did you know? I mean, Trump did say something. Well, actually, we'll look at the thing, but Trump did say something about it's a great time to buy or something like that. But yeah. Hi, Tom. Really appreciate the daily analysis videos. I think you're the most balanced and reasonable technical channel on YouTube. Appreciate that. Look, again, just remember, indices predominantly more bullish than bearish, actually statistically likely to be that way. So generally have a bullish bias and optimism. But I will say this, do not forget about the tariffs. If we're sitting here 6 months later and the market's like, woohoo, we're up at all-time highs, we're dancing, baby, it's all good. They do take a toll. It just takes a while here. Your masterclass is the best out there. Made my portfolio grow under all conditions. Thanks. Appreciate it, Guy. Thank you for joining in. I appreciate that very much. Would you buy semis here? Semis are still relatively cheap as long as we have de-escalation. They're at better prices. Or actually, 236 today. They're up a bit more than I thought. 5 point. They're only up 2 before. So people have really rallied on those. 5.2. 236. Hmm. I don't think you really can if you're looking at replication. You can say this is a very important break level, which it is, but you kind of almost need cheaper price to make the stops worthwhile unless you don't care about that. It's a good break level, but again, people are hyped today. You can feel it in the room here. Everyone's going crazy. Liberation Day, you scared the crap out of me in Chinese stocks. Really? The Chinese stocks didn't really get belted that much considering where they'd come up from. Can you explain why about yields are important to watch? So the debt has to be refinanced later on this year in terms of the treasury debt. It's the biggest balloon we've ever seen, and no one seems to be discussing it, but I've been thinking about it for quite a while. I think it matures heavily third quarter, fourth quarter, and then 26. We're also got a lot of private equity credit that's due as well. And if they have to all finance at high yields, it can cause significant harm, of course, to the US economy and to private debt. That's a big concern. And of course, if we have kind of like an economy that needs cuts because unemployment is starting to remember the Fed's dual mandated. One side, they've got to keep unemployment kind of like stable. That might be dropping off a little bit with capex spend and other things looking bad. So they want to stimulate the economy and they're unable to do so because the long date yields are so high that it causes significant problems. So it's kind of like, it's a catch 22. You've got really high debt refinancing, which is bad, and then you can't cut rates to help support one of the mandates. So it's a double trouble. The level to watch is about 4.95 on the US 30-year. XLV, yeah, that news has been overshadowed. So XLV's news was Trump made a big statement about pharmaceuticals. So XLV itself hasn't really been belted much considering, but he basically said that all pharmaceutical prices would be down 30 to 80% or something effectively immediately. It isn't actually an executive order, so it's not really law as far as I understand it, but it could be potentially put through. I think once the dust settles on that, it'll probably be a lot less, but XLV is not necessarily, just farmers or anything. So you've got to remember pharmaceuticals are getting belted today, probably one of the only things down in the market. Healthcare itself is holding relatively stable, but it is a defensive. So it's sitting kind of sickly at this stage. You can see here the other defensives, though, not much up. It's risk on across the board today. Trump's comments on the index is super volatile. Absolutely. The most significant gains are made over the night. This is true. If you've ever seen the chart, I can share it in one of the videos. This is that if you buy at the start of the day and then you sell at the end of the day, you will make like so little money compared to the person that buys at the end of the day and holds over the overnight risk. It's ridiculous the percentage difference for 20, 30 years. Tom, why do you assume people? Why do people assume that Australia is down under? There's no up and down in space. It's because of the way the toilets flush. So I've heard. Thoughts on Google? I think Google is at a pretty damn good price in terms of technicals and fundamentals. It's probably not going to do as well as the market broadly today as it's a service, but still up 3%. Not as affected by the tariffs, which is kind of cool in some ways. But yeah, pretty solid pricing. I mean, I don't fall for the concept of it being as bad on the AI stage. I think the big problem for it is antitrust. I appreciate that. Can you please take a look at FX Evolution for me? 1.8K viewers, only 300 likes. Seems undervalued to me. Appreciate you, man. Thank you, Milos. Appreciate it. Yeah, I don't mind Google. What do you guys think in the chat? IV 50% on NVDA puts in the 88th percentile. So dealers are going to start fading unless news forces them to rehedge. Don't buy options is the correct move. Yeah, this is from YouTube basically with an R. I don't think today would be the best option to stay on buying for sure. And usually it's if you've got on Friday, oh man, you're loving life. You're probably like salivating all over the place with your calls today. But yeah. Tom, any thoughts on how market will react if CPI comes back cool? Yeah, that could be bullish if it comes back cool. I wonder if someone knows about this number. Well, I'm so interested to see this number. Guys, is it hot? Is the CPI coming in hot? I really want to know. Now that we've seen this deal on the weekend, which is basically just take away the stuff. Oh my goodness. Is this bad? Is there something really bad here that we don't know about yet, Peter? I don't know. What do you guys think? I get kind of excited about seeing this one because I feel like there's something in this. Best deal in the world. US taxpayers will pay 30% on Chinese goods and Chinese taxpayers will pay 10% on US goods. Well, the 20% of that, I think, is the fentanyl thing. Tariff front loading is going to make CPI hot, in my opinion. Powell knew this was coming. I suspect it allegedly, possibly. Yeah. He just sat there and did nothing last week, eh? Hey, Tom, what do you think's holding back silver from breaking out? Those evil paper contracts they've got on silver, snaking their way since 1970s. I think it's a mixture of the dollar at the moment that's holding silver back because obviously the dollar bullying is bad for silver when you're pricing it against dollars. It's holding relatively well. And I think there's something serious. Like if you've ever looked at silver contracts, you'll know that there are several paper strategies that have kept silver down. And boy, oh boy, do I want to squeeze on it so bad. Like I want that 34.50 to be taken out. It would make me quite happy. It made me as happy as I was with gold breaking through like the last $1,500. The bad thing is regional bank basis trades are currently causing pain. Yeah. Market pump 1 hour before news outlets knew, someone knew. Yeah, market did start moving already. I think like, I had to announce it to you guys in the daily show, and obviously it changed, and I instantly modified to let you know that Fed announcement last week, that rip low of NASDAQ, that steal and break, it really smelt of a new high. And I just feel like this is all, Trump came out and also said, oh, it might be okay right now for the market. So overall, there's a lot of flow was going through. Stacy, that would be a good idea if you can do the options course when you got time to do it. Fed listening to Trump would be a scary thing. Well, who knows? The Fed didn't do anything last week. So far during this announcement, as we've opened up now, sorry guys, we missed the bell there. One, reading the chat too much. So ding, 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 ding. We are open. We are up 3.55%. We're up 4 on the NASDAQ, dropped off the resistance highs. 58.40 hit on the US 500 in an absolute banger morning, of course, with this huge, huge move that pushed through to this resistance and into our box of kind of the next resistance. Now, this will be the close that'll be the key. I will look for dark pools for you guys today. I think there's going to be some liquidity that starts to appear. That was like a ghost. Things just came out of nowhere. I think there will be some big trades here today. I would suspect someone will take some profit. I'm hoping for some of you guys out there that you get gap fills on the way down, just because I'm sure some people want to get into the markets. I would say that semiconductor SPY certainly looks a lot better. Let's have a look at how that opened in terms of a combo, because I'd like to see that break the new high. It so did. That's a great sign. That is a great sign. So not only now do we have the break of the downward trend line, we've got a new higher high on semi SPY. Again, if tariffs sit for 6-12 months, well, that's going to be, the longer they sit, the more damage they will do ultimately because we still have them on. But this is a big deal. I like that. So for pullbacks in the future, that will be good. And the question will be yields today. So watch that US 30Y. Let's see how that's opening. US 30Y, 4.883. That could get wild today for you guys during the session. So watch that one. Didn't even touch on US 2K. US 2K made a new high as well. That's a good sign. Again, these are all good signs because what they're showing us is they're showing us changes of trend that now when markets pull back could potentially have very nice nice activations. I'd actually really like to see the market take a little bit of target here. What do you guys think? Anyone targeting this area? Amazon up +9. Let's have a look at the mags. So Amazon 8.43, probably the biggest. There's no doubt it's the biggest winner of this. Microsoft doesn't care. Relatively, why would it care? NVDA pretty good, 4.5. Meta up 5.6. That stock's a thing. Apple only up 5 from 6. So yeah, let's have a look at the sectors that are doing the best. I'm going to load the sectors for us because we need to check them out. I wouldn't worry about the call walls, but I will update because they were all going to be blown out today with gamma squeeze. Options rebalancing today will also be very interesting. A lot of people, especially options riders, will be trying to get rid of things and push stuff down. In terms of sector today, we have semiconductors, number one, regional banks. Never a problem to have regional banks coming along for the ride. Home builders, big winner off this as well. Makes sense. Obviously, cheaper imports. They were destroyed before any of this, though. Defensives, all down. Gold stocks, the worst after having usually a pretty good run. And healthcare, bucking the trend of the what you would think would be a pretty bad kind of morning for it, really, with Trump's other announcement out there. But I guess, it's not really pharmaceuticals completely. Yeah, so overall, very strong day here on risk on. These are all risk on sectors, except for energy, but energy is also flying. And if you were ballsy enough to take an energy trade, geez, you're doing okay. 3.55. We'll update that now. ES short was a good idea, says Investigator. Did you take 20 points off or something, Gator? How much did you get? Oh, okay, you got almost 30 points. Is there a system update waiting to be installed, Tom? Do I have a system update waiting to be installed? Probably. These Macs, they're sneaky. Can you please review AMD's chart? Yeah, we can have a look at AMD. Shop up +11. Yep. How come copper and junk bonds aren't over 200-day moving averages or not even close to them? They seem weak compared to stocks. The bonds market is not happy with yields. So that's because bonds are made up of two things, risk and yield. So basically you've got to think of it as today risk is improved, but yield is up, so bonds will be down. Risk is not good enough improvement, so overall you're going to be down. Let's have a look at AMD. Oh, I didn't realize there was an announcement here as well. Richard Stevens, sorry, Richard. $2.99. Do you think retail FOMO could push through resistance? We did push through. Oh, you mean that resistance? No, I don't think so. I think that retail FOMO is real today. People are absolutely frothing. I haven't seen froth like this for a few months. Since actually probably this is similar froth that we got after the Trump win. So when Trump won the election, for about a week and a half, people were absolutely ballistic. And then obviously that died off. So Richard, thank you for the question, $2.99. And Ryan, becoming a new member, thank you for your support, Ryan. Appreciate it very much. If you are trying to join the private community, though, I'd have to suggest jump on over to fxevolution.com. And that's where we have it. So just remember that it's actually on the website, the 7-day free trial. CPI tomorrow, 8:30 a.m. Yes, guys. Markets have pulled back a little bit here as people have taken profit this morning. AMD, I mean, very similar to the other kind of semiconductors, up a decent amount, 6.33%, not broken through 115. I have a bit of a soft spot for the pricing down here for AMD, but that doesn't mean it's TA worthy. So yeah, I don't know why, but we've got some chart lag here on this one, so maybe it did go through with something. What's the expected general targets before resistance? We kind of hit resistance immediately at 58.40 at the start of the stream. What do you think the range is for Dave for scalping? Probably quite wide. To guess though, we can have a look. US yield still just sitting, by the way, no movements there. Let's have a quick look here at the expected potential moves. The problem is everything got moved from options. So usually I'd give you the expected options ranges, but I can't do that because this gap is too large and the options were, usually you do it on the previous day's options move expectations. So I won't be able to really tell you the difference range unless I was looking at live options. Have I already covered gold? We didn't look at gold specifically, but we did look at silver. DAX already near Friday's US low. Yeah. Okay. Let's have a look at the DAX. DAX is actually down. Is this a buy the rumor, sell the fact, guys? Old DAX coming down. US market lost 50 points. 0.8 down on the NAS. Have a look at gold. Silver holding relatively stable. Gold pressing this. I don't like that. It reminds me of kind of seeing gold potentially back here. I really liked this buy. I thought that was an amazing demand purchase. I am kind of worried about gold. It's basically a double top. So if we lose this line, I could see gold down at 3K. So it needs to hold right here, right now. I'll update tomorrow morning, or your close in the US. Can Trump trap us? What if he said buy last week and the market is going down in the end? I mean, he's probably, I don't know what he said before. Is this the bull trap I've been waiting for about 2 weeks? Yeah, we sat for a week of range. This is symptomatic of the type of thing that can happen. It's good news for sure. It's what the market would have already expected. It's basically good news because we just took away the bad news. It's not wow, everything's fantastic. We've still got tariffs. Tom, I have to drop in a second, but does weakness past the first 2 minutes concern you in the indices? I closed my tech longs after the 2-minute low broke. I mean, look, I don't really look at 1 minute, 2 minute, or even the first hour of trade traditionally. I always think of the first hour as where us as retail traders are. When you go and you work in a firm or you go and you deal with big money, they almost all just trade the end of the day. And the first hour is kind of called in fact, when I used to do a lot of options, if I was selling premium, I'd sell premium all morning because it was so good. You would see crazy spikes in premium on the first couple of minutes of the open. I mean, that was the place. So yeah, you always would attack the open, but you'd attack it from kind of like a hedgy perspective, and then the close would be where you'd buy the bigger funds. Check the volume on the 1 minute candle at 940. Okay, have a look. I assume we want to use an ES future. It's a bit laggy here. In 1 minute. BTC goes up, gold goes down, risk on signal right there. Yeah, BTC is certainly a bit stronger. So if I was looking at ES futures, obviously here's the news. We've dropped a lower low early, which is here. So we dropped that little bit of a lower low. So people that shorted here would be happy with themselves. Obviously that has then gone down. You can see here the volume that's come in instantly. So that's big volume. Somebody has definitely done a massive transaction. But Again, you have to put it back to everything in perspective. So if you have a look, that's big volume there, and that's near the close. And you can see here the close volume. Look at the close volume in comparison. Look at that massive volume switch compared to over here. So you probably can't see it too well on this chart, but let's just say that was way bigger. Done AMD yet? We had a look at AMD. We haven't got a new higher high, so we're just kind of breaking towards resistance. The market's okay. I'd have a look at the weekly. I like the weekly level predominantly on the low side. I can't see it. Yeah, it was a bit difficult to see it because it's a 1 minute chart. Just closed all long positions. All my money is now on the sidelines. Just freaked out about going back in. Just remember, habit. The main thing you want to do is just create a replicable strategy where you go back in on what you have seen in the past to be a replicable concept. And once you've done it 40, 50 times, then you kind of don't need to be freaked out. You just do the same process. A lot of people, if this market does sell off, they'll be scratching their heads and saying, oh, how's that possible? So much winning. We're winning, damn it. Well, it's just because the markets price in this stuff over time, and they started pricing this in probably about 400 or 500 points ago. It was behind the FXE logo? I don't think so. Oh, the volume. Oh, okay. And you meant like this volume. Yeah, the spike high. NAS still above the daily VWAP. Yep, and that's a good one to put on. So what I would do is a couple of different VWAPs that I would pop on. I'd pop one through here. And the reason I would do one through there is it doesn't seem to be loading. Chart here. Refresh this. Get an ES future. And we'll go a 3 minute. Okay. Let's load a quick VWAP on the levels that I would predominantly put them on. And I would put one on this earnings announcement. Oh, not earnings announcement, it's big news. Oh, I don't know why that's not going through. There it is. Okay, so we're underneath that one. So that's one I would do. And then I would also do one from the low. So we know that down here, that would be a key level I'd watch, which is at 58.21 on ES. God, I hate ES numbers compared to the S&P. The delta on these puts, yeah. Puts not going to make sense today. Everything's going to be here. Don't have a consistent strategy yet. Change it up too much too often. Yeah, hopefully you can get to a point where you want replication. Then do it 40 times, yeah. That's the good one here. Tom, I think BTC is going to end up at 140K. Yeah, I wouldn't disagree with you. Sometime soon. What do you think? I wouldn't disagree with you. I mean, I had a 125 to 150 as my case scenario, and it fell off. Obviously, a little bit more than you'd think compared to gold. But when gold did that thing the other day where everyone, remember, just think about this, guys, and I want to leave you with this one. Only a few weeks ago, everyone was ballistic on gold. Oh, gold to 5,000, gold to 10,000. And what did we say as a community? Looks bad. Yeah. 3,500. Okay. Yes, we're aiming for 3,600 by October, but it didn't look good. And it looked like it was blowing up, blowing up in terms of too fast, too quickly. Then you fast forward to now, probably no one even wants to talk about gold, and everyone's going ballistic on, Bitcoin to $1 bazillion or something. You just got to remember, put yourself in these time slots. Remember back to those points so that you enhance your trading and investing knowledge. It's all about just bringing together the case scenario. And you've got to sometimes be a bit brave to go against the trend and go against things. That doesn't mean you have to trade it, but you have to just say, does this even make any sense? Should I really be railing these high levels and going crazy? Because that's when you get into the most damage. And I hate seeing people in this community, and not so much from us anymore, but from the AMC crowd and the GME crowd when it first came out. It was clear that they would lose all their money. And I know people that have made $2 to $3 million doing AMC and GME, and then they lost it all of it, gone, negative hundreds of thousands by the end. To imagine being up $2-3 million and then you lose it all because you're a maniac. And that's because they're not replicating. It's full gamble fest. So if you can, going against the trends gets you wrecked. Yeah, it certainly does. Going against the trend, go with the trend for sure. The trend is your friend is a decent statement, but also know when something is unrealistic, and be confident in your ability to sometimes take a little bit of profit. Sometimes you got to do that. So now it's sell the news day or what? Well, we hit the resistance before 58.40, so that was obviously the main level that we were looking at, 58.40, 58.50, not on the ES, on the US 500 code. Now we're coming back down to this 58.20, which I think is going to be a little bit of an interesting zone to see if the algos buy this kind of concept. There is a real winner's curse in trading? Absolutely. Absolutely. I call it superhero syndrome. Why didn't they take profit? Well, they did, but the way they made the money was so bad that they kept going crazy on just YOLOing things, and they YOLO'd it all to death. I tripled, then lost half of that on AMC was my welcome to trading. Yeah. You can't stop because you don't have a rational mind. You have a insano mind. So when people make money the wrong way, they lose it all. It's kind of like lotto. Have you ever seen those people that come from the street and they're quite poor and they win lotto, and then they're bankrupt like 2 years later and they win like $100 million? And you're like, how did you go bust? And they're like, I don't know. I mean, it's just wild, yeah. Ease come, ease go. That's the YOLO way. Eli doesn't care. Low IQ individuals? Well, I mean, maybe, and maybe not. I don't know. The key rule of thumb is, remember, when you make your first mill, there are two things I want you never to have. Number one is bring on another 1,000, which is a yacht or boat. Okay, boat. Bring on another 1,000. No boat for you with your first mill. Secondly, no Lambo. You've now achieved holding onto your money. Okay, no Lambo, guys. No Lambo. Poor money management is tied to poor decision making, which tends to be lower IQ. I don't think IQ is, I mean, that could be partially relevant, but I don't think IQ is success. In fact, most of the richest guys I know, I wouldn't say they have anywhere near the highest IQs. They're just slightly above average, probably like 105s and 110s. At the end of the day, human brain is like ape brain. Yeah. Have to be aware of it. Ferrari over Lambo, you're not wrong. Ferrari is the better choice. Ryan's $10 donation. Thank you very much, Ryan. Appreciate it, man. Thank you very much. Porsche then? Yeah. No Lambo. No Lambo. I'm not going to be sponsored by Lambo anytime soon. Treat the market like a business and not like a slot machine. 100%. It is a business. So we didn't quite get to this level yet. We didn't quite get to this anchored VWAP level. I'm just going to check it on the US 500 code. Interested about having a look at this here. I'm just going to use the same low here that I want to check out. Okay, so it's a little bit under. This is volume weighted, the ES1. So that's about 5,800-ish. Could meet it. Yeah, I like that level. Let's see what happens here today. So that could be a bit of a zone, like a little undercut zone. Story of the day so far is, for anyone that doesn't know and you've come in, is of course US, China kind of truce. No more tariff in terms of the big tariffs. Now littler tariffs, 30% US, 20% of that some fentanyl thing, and then 10% China. The market obviously likes it. The market's pushed to resistance highs of 58.40 on the S&P. And the NASDAQ hit at around the same point, a resistance. And the thing you want to watch today is yields. And of course, these lows here on the US 500. So these little structural lows, want to see what happens, like this type of thing that happens, then it could mark a little bit of selling. What I'm specifically looking for all of us is going to be the close. I'm very interested to see what the street gets up to. When do they place the big transactions? Are more transactions coming in through the day? Are more transactions coming in at the close? These things will matter. Is this a win? Yes. Semiconductor SPY certainly likes it. And I never dislike semiconductor SPY going up. So that's obviously a good sign. If you're in longs and you're holding and you're feeling fantastic, I wouldn't say you have to feel any worse. I mean, probably going to get a tax cut in the future and possibly deregulation. So they're good. Yields will be the watch. CPI tomorrow at 8:30 a.m. I'm actually kind of pumped to watch that one. I want to know what the news is on that. And of course, let's hope that we get some pretty solid ability to get some nice replicable trades in. I think everything changed as of the Fed announcement last week. Not so much to do with the announcement, but the way the market's structured. And now if we're going to get pullbacks, I think we're leaving 1, 2, 3, 4, maybe even 5 gaps behind. That's pretty rare. So if you're feeling FOMO, there are still a lot of opportunities in the markets. I mean, there are plenty of stocks that are belted still. Google, pretty belted from a technical perspective as well. And there are heaps and heaps of stocks still low. So don't ever feel FOMO. Just think of the abundance mindset we talk about on the channel. There's always another opportunity, guys. Don't chase things. It's a waste of your time. Replicate as much as you can. And for people that were like, patience, react, and then you miss out, which I saw a few people at the start saying, it's different strats, yeah? When you're trading, patience, react, don't predict is all about trading. Investing is more about buying, just price and timing. And of course, position basing is something similar to that. So remember, the patience, react, don't predict is predominantly for most trading concepts. Investors don't care too much because you're buying ratios and you're just buying and holding certain things. So you're all about ideas. You're all about what sectors do I want to be part of? And of course, what price do I want to be part of on stocks? And then you're looking for basic changes of trend. So that's the big thing that you want to be looking for. All right, guys, you have a fantastic day. Thank you so much for joining us here today. It certainly is a big one. If you're on the long side, congratulations to you. If you're short, hopefully the markets pull back a little bit here. Daily 200 looks to be getting closed above. That's a good sign. I'm looking forward to bringing the close show to you. Thank you so much for watching it as always, and have a fantastic session. Bye for now, everybody. And thank you also to Ryan for his very generous super chat, and Richard as well. Thank you, guys. Bye for now.